Welcome back. Today is the last trading day of October. Futures are down this morning as we look ahead to the November Federal Reserve meeting that begins tomorrow and Wednesday. The Dow Industrials right now down 141. The Nasdaq also lower in the double digits. Joining me right now is Cornerstone Wealth Managing Partner Jeff Carbone. Jeff, great to see you. Thanks very much for being here. So the Fed meeting kicks off tomorrow. What are you expecting?
Yeah, I think right now it's all expectations probably for 75 basis point hike. But we'll see, right? We've seen some of the data from inflation moderating maybe last week. We saw ECI, Employment Cost Index, and then PCE come in a little lower, which was good. And again, not baby steps, right? It's all about baby steps. Maybe we're seeing improvement from where inflation was at these highs, and data's going down a bit. But the biggest thing the last couple of weeks has really been no big surprises on the inflation front. But so it may give the Fed the ability to start giving us a little bit more indication of we're not a dovish on the pivot, but maybe they'll start moderating like the ECB and Canada and Canadian government Fed did last week with expectation for 75, and we got 50 from both of them. So we'll see what the Fed's looking at and give us a little bit better indication of are we staying on that dot plot of 4.5, 4.6. We'll take it from there. Yeah.
Well, look at these markets. The Dow Industrials up 13% in the month of October, 8% on the NASDAQ. It's been a real momentum market just in the month of October. What's behind this? Because, you talk about baby steps. It hasn't been such baby steps with the Fed. You're talking about aggressive moves, 75 basis points, and we may get a fourth tomorrow on 75 basis points. That has impacted the economy. What's behind the gains in the stock market despite the economic slowdown?
Yeah, well, I think, it's Halloween, so we could it's all been about this creepy inflation or the scary earnings or the ghoulish Fed that's been out there, right? So we can use the Halloween puns. But the, earnings, are coming in fairly, strong or better. We have 11% earning on the earnings. On the revenues, up about 11 year over year. Earnings per share, up about 2% overall. A lot of that coming from energy. We are seeing, the tech sector down about 6%, and communications on their EPS down about 17%. But again, the light is maybe the Fed starts to look a little bit more dovish, and we'll see what happens here. But do think we're going to see a continuation of maybe this year-end rally, but don't believe it's over. We're not ready to call a bottom yet. We think next year is still going to be bumpy. We've got to see what the Fed has in store, and still waiting for some earnings revisions for 2023. So yeah, good time to maybe look at rebalancing, get a little bit more defensive, but not a time to go all in as of yet.
What have you heard from earnings so far? We're in the middle of the third quarter reporting season. Last week, we saw a lot from big tech under pressure. This week, we've got Uber, Peloton. What do you think have been the stories out of the third quarter earnings season so far?
Yeah, well, the big things that you certainly, like you said, we had Apple probably save the day on Friday last week with because the FANGs overall have been pretty disastrous, right? We've seen some pretty big misses, top and bottom, from the FANGs, and technology, and the Nasdaq has paid for it. And even though we've seen October, which tends to be one of the stronger months of the year, you mentioned the Dow was up almost 14. We'll see how it finishes up today, but Nasdaq was up about 5. So we're still seeing that pressure on from technology. Over across the board, and we're still, again, waiting to hear what the revisions will be and what their expectations. Semiconductors, you could name it. Technology is continuing to cease and struggle, but hopefully we'll wait for that dovish Fed pivot sometime in the next year, and we can see that it'll be time to go in and add some momentum or growth back into the portfolio.
So how are you doing that then? Are you right now buying stocks? How are you allocating capital right now?
Yeah, well, again, we feel valuations overall are reasonable. Yep. They're just not low, right? So we'll give them a reasonable valuation, and as I mentioned, until the Fed really gives us better indication of they're taking their foot off the pedal. Don't think it's the all clear and it's time to go back in fully, but it's a good time to maybe reposition, continue to look at defensive sectors.
Okay.
And defensive, our favorite area is really continues to be healthcare because it's continue to trade at about a 10% discount overall. And when you compare that to other defensive sectors like utilities, getting a better pricing at this point.
All right, we will leave it there. Jeff, good to see you this morning. Thanks so much. Jeff Carbone joining us this morning.